This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Bank on it. 3 of the nation's biggest banks reported better than expected quarterly results. But does that mean they're worth investing in? You're fired. At least that's what Senator Warren would like the president to say to the chair of the SEC. 'Tis the season for earnings, that is, and our Market Monitor guest is finding some investment opportunities this time around. Those stories and more tonight on Nightly Business Report for Friday, October 14th. Good evening, everyone, and welcome. The financial sector, it's one of the most influential groups in the market. And today, some of the country's biggest banks showed that business is okay. Maybe not great, but okay. Earnings from Wells Fargo, JP Morgan, and Citigroup all beat Wall Street expectations, but profits were down across the board year over year. That was enough to lift the broader market, but not shares of all the big financial institutions. And that's partly because questions still remain about the fourth quarter. And of course, a lot of attention was on embattled Wells Fargo, which said customer traffic at branches was down in the wake of the fake account scandal, and fewer checking accounts were opened.
It's gutless leadership.
During John Stumpf's final quarter as CEO at Wells Fargo, profit dropped more than 2.5%. But the earnings news at the nation's third largest bank wasn't all bad. Despite charges, the bank opened as many as 2 million accounts with either fake or unauthorized customer information. Profit was still higher than expected, and revenue rose more than 2%, also more than analysts predicted. The after effects of the sales scandal, a $185 million settlement, and Stumpf's ouster are still to be felt. New CEO Timothy Sloan is already looking at reduced business at Wells Fargo bank branches.
The implications for our company and on the trust of our customers are significant. Customer visits with bankers in our branches, a subset of overall customer traffic, were down 10% in September compared with a year ago. The lower level of interactions in September was driven by lower internal referrals, decreased product offerings, and reduced marketing.
JP Morgan Chase said on its earnings call that it too has identified problems with its employees cross-selling, but that it does not think the problems are systemic. The nation's largest bank said both profit and revenue beat expectations. Profit was down from a year ago, mostly because of a one-time tax benefit last year, and revenues were up more than 8%, in part because of equity trading fees, up by a third. And its investment bank had a record quarter, with fees jumping 15%. Fixed income trading was also up a whopping 48%, thanks to a rush of activity after the UK's June Brexit vote. Citigroup is recovering from past legal scars. It too saw jumps in trading and investment banking revenue. Overall, Citigroup's earnings beat forecasts for both profit and revenue, though profit was down 2% from a year ago, and revenues were down 5%. Still, investors tend to smile when earnings reports beat forecasts.
The reports have all been positive. What we are seeing is that the money center and the capital markets revenues are really pushing Citigroup and JP Morgan higher. We are seeing the momentum of the overall just markets, and the activity we're seeing there should rise all tides for all these money center banks today, and then next week we see further releases.
So here to give us more analysis on those bank earnings and his take on the sector as a whole is Eric Wasserstrom. He is senior banking analyst at Guggenheim Partners. Welcome, Eric. Nice to have you here.
Thanks for having me.
So taken as a whole, were you pleased with what you saw from the major banks?
Well, generally, I think the news was a little bit better than expected. So I would say net more good than bad. In particular, what we saw was loan growth was stronger than we were forecasting, and I think several analysts, including myself, thought that looking at the data over the course of the quarter could be uneven. And as you mentioned in your piece there, the capital markets results were stronger than expected, and bad loan costs remained very low. So I think those are the positive points, and those things combined to offset higher costs than most of us were looking for at these institutions.
Does the loan growth that we saw almost pretty much across the board, does that portend a better quarter next time around, or not necessarily?
It certainly may, because to the extent that that an asset is put on a bank's books in this period, it will continue to generate earnings over the course of its life. But in terms of the growth rate, I would say it's a little bit too early to know. But certainly the initial signs were more positive than we saw it, certainly.
Let me turn you to Wells Fargo. I know that there are still a lot of costs, and you know, we heard from the new officials over at Wells Fargo on various news outlets today. The legal cost issue seems to really be kind of not necessarily weighing on the share price, but it certainly is an overriding concern.
Yeah, no, that's exactly correct. And I think it isn't just the legal costs, but also the implications for their business model, which clearly in some form is going to need to change inside its retail banking business. So I think those are the two concerns. How much ultimately will they have to spend on litigation and regulatory response, in other words, fines, and what does it mean for their go-forward business?
What about the changes that they have made? Mr. Stumpf, as we mentioned, has left. Tim Sloan is in position now. However, he's part of the old guard, and there are those who are not satisfied with his appointment to that particular post. How do you feel about it?
Well, I think that there's, well, I guess I would say I share some of those concerns. On the one hand, I think what Tim articulated today was a very robust attempt to fully assess and remediate the issues, and he acknowledged, I think, at least implicitly, if not explicitly, that this was in fact a systemic issue, which was a characterization that John Stumpf resisted. But I think that I share the concern that not a single member of the management team is new. They all come from inside the existing organization, including the new head of the retail banking business. And I think I wonder to what extent maybe new blood might be a benefit.
Of the banks that reported today, quickly, Eric, which one do you think holds the best investment opportunity?
Well, the one that I like the best is Citigroup, and I think what you saw today was that their growth in their consumer bank, particularly outside the United States, is beginning to turn, which I think will be a medium-term benefit to their earnings.
All right, Eric, thank you so much for joining us. We'll leave it there.
Thank you.
Eric Wasserstrom with Guggenheim Partners. Well, the new CEO at Wells Fargo was not enough for the state of Ohio. Today, it joined a growing list of states that are suspending business with the bank over that fake account scandal. Governor John Kasich said that he's barring Wells Fargo from participating in state debt offerings and financial services contracts for 1 year. On Wall Street, stocks pared their gains after the bank-led rally lost some steam midday. Not only did investors have to parse through bank earnings, but they also had to decipher comments from some Fed officials. The Dow Jones Industrial Average rose 39 points. It had been up more than 150 earlier in the day, and the Nasdaq and the S&P 500 rose just a fraction. And despite today's gains, all three major indexes were lower for the week. Household spending increased in September by the most in 3 months. The Commerce Department reports that sales at retail stores climbed 0.6% from the prior month. That matched expectations, and it follows a slight decline in August. Auto dealers and gas stations saw the biggest gains. Separately, producer prices rose more than expected last month, a sign that inflation could be firming. The Producer Price Index, which measures changes in the prices that companies receive for their goods and services, was up 0.3%. Meantime, consumer sentiment has unexpectedly dropped. It fell to a one-year low in October as Americans' outlook for the economy turned negative. The University of Michigan, which issues that report, said the decline may be partly due to the contentious presidential election. In theory, the more upbeat the consumer, the more they will spend. And that's important for the economy since spending accounts for about 70% of economic activity. The head of the Boston Fed says December may be an appropriate time for the Federal Reserve to increase interest rates. Eric Rosengren favored raising rates at the central bank's last policy meeting, and in an interview today said his views have not changed.
My hope is that we do it slowly and gradually, but that the longer we wait, the more likely it is that we're going to have to do it more quickly. Obviously, you don't set monetary policy to one asset class, but I think it's symptomatic of what happens when things start to become less sustainable. So whether it shows up inflation or whether it shows up in asset prices, it's a little bit hard to determine. But that's why I'd like to have an economy that is at a sustainable unemployment rate over a long period of time, so we can make sure that we have as long a recovery as possible.
In a separate speech, the head of the New York Fed, Bill Dudley, said that he would expect a rate hike to occur this year. In Washington, Senator Elizabeth Warren is calling on President Obama to replace the chair of the Securities and Exchange Commission. In a letter, Senator Warren writes that Mary Jo White has refused to draft new rules requiring corporations to disclose details of their political spending. Eamon Javers is in Washington following the story for us. Good to see you, Eamon.
Hi, Sue.
President Obama is not likely to fire his top financial regulator 3 months before he leaves office. So what's behind this letter?
Well, Democrats in Washington are looking at the polls in the presidential race, and they have decided that Hillary Clinton is likely to be the next president of the United States. If that's the case, the battle to shape that Clinton presidency is on right now. So think of this letter from Elizabeth Warren more as a shot across the bow to the Clinton team saying, hey, we on the political left, the sort of Bernie Sanders wing, Elizabeth Warren wing of the Democratic Party, we want to make sure we're putting some markers down about what we want at the SEC, and we don't want Mary Jo White to continue to be the chair. And remember, there are also a lot of Democrats who really mistrust Hillary Clinton. They think she's too close to Wall Street, and they think that Mary Jo White is also too close to corporate America and Wall Street. So there's this left versus center-left debate going on within the Democratic Party right now.
If Ms. Clinton is elected president in November, one, how much influence would she have over the SEC? And do we know anything about her relationship, if any at all, with Mary Jo White?
Well, she's going to have a lot of influence. If she gets elected, there are typically 5 commissioners on the SEC. Right now, there are only 3, though, because there are 2 vacancies. So that means if you had a President Hillary Clinton in January, you'd be looking at a president who gets to appoint 2 SEC commissioners and then controls the chairmanship. Typically, the chairman will resign if somebody from the other party comes in. In this case, it would be somebody from the same party coming in, but presumably Hillary Clinton could lean on Mary Jo White if she wanted to. Mary Jo White's term runs until 2019, and Hillary Clinton and her staff, presumably right now, are working through a list of transition with their transition team of who's going to take which position in Washington if she wins. You would imagine there's a lot of deal making being made behind the scenes. This letter that we saw that was released at 6 a.m. this morning may just be sort of a public indication of some of that behind the scenes deal making that we can't see.
All right, Eamon. Thank you so much. Eamon Javers in Washington for us tonight. Still ahead, will Netflix's big investment in original content pay off for investors when it reports its earnings on Monday? The U.S. government has issued an emergency order that bans all Samsung Galaxy Note 7 smartphone devices from all flights. And the order comes as Samsung's losses continue to mount. Today, the company put a number on what the discontinuation of its flagship Galaxy Note 7 smartphone will cost the company. The total? $5.3 billion. Earlier this week, Samsung slashed its third-quarter profit forecast by more than $2 billion. Today, it forecast a further hit of more than $3 billion for the 6 months through March of 2017. Samsung says it has enough cash from other businesses to absorb the cost of that phone recall. Netflix is one of the major earnings reports that will be released on Monday, and investors will be watching to see if its growing investment in original content is starting to pay off. Julia Borston has more.
Just ahead of its second quarter earnings report, Netflix announcing a big deal for Chris Rock's next 2 comedy specials, his first in 8 years. They'll tape next year following his world tour. Netflix reportedly paying $40 million for the 2 shows, which analyst Barton Crockett says is likely a record investment in comedy specials.
$40 million, though, has to be seen in the context of the $6 billion that Netflix is spending globally on content. So if you're spending $6 billion on all kinds of shows, maybe you can throw $40 million Chris Rock's way, and it doesn't really affect your P&L, and and maybe it turns out to be, a good investment for Netflix.
Rock joins a number of critically acclaimed comedians on Netflix, including Patton Oswalt, Aziz Ansari, and Chelsea Handler, furthering its reputation as a destination for comedy. And Netflix's win is a loss for rival HBO, which has a 20-year history with Chris Rock, airing his talk show and previous comedy specials. This investment in Chris Rock is part of Netflix's overall plan to have 50% of its content be original programming, as Hollywood studios look to distribute their own content more directly.
There's definitely this separation that's happening between Netflix and the studios. And I think from Netflix's perspective, they're trying to position this as a positive in their evolution, that they'll have unique content that you can't get elsewhere, and that's really what viewers are most interested in now from Netflix.
And with Amazon and Hulu also ramping up investment in originals and HBO going direct to consumer, industry watcher Barry Diller said earlier this week he still thinks Netflix's strategy can pay off.
They don't really make very much money, but they're going for a much bigger shot, and to increase their subscribers so that eventually it will work out so that the economics work out. That's a fantastic model. They are, quote, winning. I can't see them ever losing.
We'll see Monday if Netflix's investment in originals, including this summer's hit Stranger Things, helps lift subscriber numbers. For Nightly Business Report, I'm Julia Borston in Los Angeles.
Salesforce says it will not bid for Twitter, and that's where we begin tonight's Market Focus. In an interview with the Financial Times, Salesforce CEO Mark Benioff said that the social media company was not the right fit for the cloud computing giant. Last week, reports surfaced of several companies dropping their interest for Twitter, with Salesforce remaining the only potential suitor. The news sent shares in different directions. Twitter was down 5% to $16.88. Salesforce popped 5% to $74.27. Ariad Pharmaceuticals came under pressure after one of its treatments caught the attention of former presidential candidate Bernie Sanders. Sanders tweeted, quote, "Drug corporations' greed is unbelievable. Ariad has raised the price of a leukemia drug to almost $199,000 a year," end quote. The drug maker had hiked the price of the cancer medication 6 times since 2015. Ariad shares plunged nearly 15% to $11.14. Beverage giant PepsiCo may be eyeing probiotics drink company Kavita. Reuters says PepsiCo, which already owns a minority stake in Kavita, is nearing a deal to take over the company. A potential deal, which is not guaranteed, could be finalized this month. PepsiCo shares rose nearly 1% to $106.83. And Hershey's says its CEO, John Bilbrey, will retire from his role at the chocolate company next summer. Bilbrey is expected to stay on as non-executive chairman. Hershey shares were up 78 cents to $96.43. As earnings season picks up, a lot of attention will be paid to the industrial sector. The group is watched closely because it sells products across a lot of different industries in a lot of countries, and it is often viewed as a proxy for the global economy. A handful of large global industrials report earnings in the coming weeks and have already, in some cases, issued downbeat guidance. Morgan Brennan has tonight's Sector Spotlight.
Honeywell, in particular, has been in the spotlight, with CEO David Cote appearing on CNBC Thursday night to elaborate on the company's lowered sales and profit forecast.
Yes, I wish I'd included a lot more of this stuff. I gave credit for people understanding what our long-term profile was. I was wrong. This is one where I could have done a significantly better job of communicating this story. And we tried to do it in the context of 2017 is going to be good, but it seemed to get totally lost.
Honeywell has blamed a softening business jet market, as well as oil and gas, which Cote believes bottomed last quarter. And Honeywell is not alone. Other companies, including Dover and PPG, have already lowered their financial targets, citing the weak economic growth and softness in some of the industries that buy their products, including energy and aerospace. Analysts say the recent round of pre-announcements has been extraordinary, putting aerospace, automotive, and construction, all areas of higher growth for industrial conglomerates, into even greater focus and drawing more questions to the health of the global economy.
I think the most important thing for investors to think about as we get into the thick of earnings this quarter is organic growth above and beyond everything else. A lot of other questions around margins and cash and other areas really flow from first, where is growth coming out? Is it decelerating at a faster rate, at a slower rate, et cetera?
Ahead of quarterly results, Bernstein's Stephen Winokur likes Danaher and Allegiant. And over the longer term, Johnson Controls, and for investors willing to weather the earnings fallout, Honeywell. That company and General Electric kick off the sector's parade of earnings next Friday. For Nightly Business Report, I'm Morgan Brennan.
Our market monitor tonight likes stocks that he says should post strong revenue growth and have increased earnings over the next year. The last time he was on, back in November, he recommended GameStop, which is down 29%, JCPenney, which is up 4%, and JetBlue, which is about 28% lower. Joining us is Brian Peary, co-portfolio manager of the Hennessy Cornerstone Midcap 30 Fund. Good to see you again, Brian. Welcome back.
Hi, thanks for having me, Sue.
Overall, you say there are select opportunities, but caution remains the word of the day. Why caution?
Well, I think that we've got a market that's pretty well fairly valued. So I think a lot of the large cap stocks have had some really great price appreciation and really have done so on the heels of really small top line revenue growth. So I think that there's still some opportunities, but you have to be really selective. I particularly like the mid-cap and small-cap space, and especially ones that are more domestically focused, that don't have kind of the European or Chinese plays that may cause some problems in the future.
Let's get right to them, because you gave us 3 picks that you like. First, AmTrust Financial. You say they offer insurance on just about everything.
Yeah, they really do. Property, casualty, warranty, extended service plans. So, I mean, they pretty much cover everything. You know, this is one of those companies that's still trading at a really reasonable multiple at under a 10 PE, pays nearly a 2.5% dividend, and really, you know, has a history of raising their dividends. So it's an attractive stock. Management's done a great job in kind of keeping the growth going. I think that they'll do well this coming quarter when they report at the beginning of November. It's not going to be a home run stock for sure, but that's a stock that we would definitely purchase in this area.
Okay, next on the list, Dycom, specialty contracting services to wireline, cable, and telephone companies.
Yeah, so as you think about, you know, the fiber that's coming to the house and to the node, and as you have these wireless companies that are expanding their 4G and 5G networks, Dycom is really the service provider that's going to win in that capability. And I think that's a nice long-term business model that looks really, really good. They've done a great job of growing organically, and I think that's a trend that's going to continue for the next few years.
And Lennar is last on the list in the housing. It's probably one of the best-known names to our viewers.
Yeah, that's a great company. I mean, they were so smart in purchasing all this land that back in the last decline, and really have done a great job managing the business as well. They're so geographically diverse. They have, you know, pretty good concentration in Florida, Texas, and California, which have been some really good growth markets, but they have a great geographic diversity. Really a great company, and if you can take kind of a longer term view, has done a fantastic job managing their business, and we think that those continue into the next couple of years.
All right, Brian, thank you so much for joining us once again. We appreciate it. Brian Peary.
Thanks, Sue.
With the Hennessy Cornerstone Midcap 30 Fund. Coming up, headache in the sky, why complaints were up during one of the busiest months of the year for flying. Here's a look at what to watch next week. Earnings will be a big theme. 11 members of the Dow report, including IBM, Goldman Sachs, J&J, and McDonald's. Stanley Fischer, the Fed's #2, speaks on the economy and interest rates, and we'll find out how fast the world's second largest economy is growing when China releases its third quarter GDP, and that's what to watch next week. Two Uber drivers win a legal ruling. They are now considered employees of the company, making them eligible for unemployment benefits. The ruling was made by the New York State Department of Labor, but legal experts say this ruling may not set a precedent because jobless benefits are determined at the state level on a case-by-case basis. Thousands of United Airline passengers were delayed worldwide thanks to a computer glitch that halted departures. The issue has since been resolved, but passengers said they had to wait on board planes or inside terminals. This is the third computer glitch to hit United Continental in recent months. So you might not be surprised to hear that airline passenger complaints were on the rise during part of the summer travel season. Phil LeBeau has more on the Department of Transportation's August airline report card.
A bit of a mixed bag for the airline industry in the month of August, one of the busiest months of the year for air travel. The top three airlines for on-time arrivals, Hawaiian, followed by Alaska, and then SkyWest, all landing more than 80% of their flights on time. On the other end of the spectrum, Frontier had the poorest performance, landing just 65% of its flights on time. They were right behind Spirit and American Airlines. As for baggage handling, the industry mishandled just 3.15 bags per 1,000 passengers, an improvement over July. While the airlines did a better job in terms of landing on time and handling baggage, there was a surge in the number of complaints from people flying in August. Not surprising given the fact that Delta had a computer outage that caused nearly 2,000 flights to be scrapped, and because there are more people flying in August, there tends to be a few more complaints than usual. Phil LeBeau, Nightly Business Report, Chicago.
That is Nightly Business Report for tonight. I'm Sue Herrera. Thanks for watching. Have a wonderful weekend, and we'll see you back here Monday.